SNAP, for example, we are pulling down funds from the general treasury to pay for this. The other key component about this is that it's not subject to sequestration like other Farm Bill programs are. So if you have participated in NARC PLC recently, or really I think in the last 7 years or so, you'll be familiar with about a 6.8% sequestration haircut that came from a budget act about 7 years ago that has required us essentially to take that 6.8% off the top of every check. This is not subject to that sequestration, and the full payment rate is what producers will receive. I guess a criticism or a complaint that I have heard a lot about, particularly from producers across our southern tier counties, is that this is a program that is based on actual 2018 production. And some folks have, because of yield issues with the drought that we've seen, and obviously the drought in other parts of the country, you know, their yields on the crop side are not going to look like the yields perhaps of other parts of the country or maybe northern Iowa. The Secretary and Undersecretary Northey, I've heard say this several times now, a disaster program. I repeat, this is not a disaster program, and it is not intended to offset yield losses. That is, you know, hopefully folks that are sitting in those kinds of situations have purchased revenue or yield insurance, and that is your tool for risk mitigation of those kind of losses. The Secretary and the White House determined that we didn't really have a mitigation program for people who were affected by negative price swings due to the trade tariffs. And so this is that risk mitigation program. It's not intended to cover yield. The next slide, Jamie. I've got a list up on the screen of all the commodities that are covered for crops. Obviously, soybeans, corn, and I think a little bit of wheat we'll have covered here in Iowa. And then we obviously will carry a lot of sign-up in dairy and hogs both. One thing I will mention is we have seen some estimates about which states are likely to be the busiest based on numbers of independent farm numbers, producers, et cetera. And Iowa will definitely be probably in the top 1 or 2 states because of the list of covered commodities. If you advance to the next slide, as I mentioned earlier, for the crops, this will be on 2018 actual harvested production, so what you take out of the field over the next couple of months. And on hogs, we're paying on the number of head as of August 1st, and that is regardless of the age, size, or weight of the animals. We will not be covering potbelly pigs or pigs that are kept for pets, but any animal that is grown for commercial purposes will be eligible for the program. The owner of the hogs, the person or people with or entity that has essentially the beneficial interest, the person who owns the hogs, has the risk in the hogs, is who will be eligible for the payment. Contract growers who simply have to own the buildings and are essentially providing a service to some other hog owner will not be eligible for payment. Advance to the next slide. Dairy is the last covered commodity in Iowa, likely, and those dairy operations would have to have been in effect or in operation on June 1st of this year. And for dairy, we're actually using historical production, just as we have for the margin protection program. I'm not going to go into any more detail, as I'm assuming not too many folks on here are going to be interested in that. Next slide. The sign up began on September the 4th, and the final date to apply is Tuesday, January 15th, 2019. Again, I'm going to repeat that, January 15th, 2019. This is a hard date. We are not expecting that this date will be extended. So I would encourage producers to get in the door when you can prior to January 15th to at least make what we're calling make the application. You do not have to provide all of your production evidence at that time. You do not have to even certify what you've raised at that time. We really just need you in the door with your signature on a piece of paper that you want to participate by January the 15th. Again, that date is not going to change. If you advance to the next slide, Jamie. We're going to have two different payment timeframes. The first, which has already been announced, is we're calling it first rate, for lack of a better term. That was the rates announced on September 4th. It will apply to the first 50% of the producer's actual production. This payment, this first rate payment, is guaranteed. There is no need to be the first in the door. There is no, anyone who comes in, signs our form by January 15th, and certifies their production for this first rate will be guaranteed the first payment. Again, it's based on 50% of the producer's 28 actual production. We'll go through a couple of examples here in a few minutes to walk you through that so you understand. The second rate will be determined somewhere the week of December the 3rd. And that's a payment that, if deemed necessary, will be made. So the administration will be taking a look at trade progress, if we're able to get some trade deals worked out, if we're able to get some of the barriers or the tariff barriers reduced or eliminated, then it may be determined that that payment is not necessary or that that payment rate should change. I'll go through the payment rates here in a second, but again, this second rate payment in early December is not a guaranteed payment. If it is determined that a payment is needed in any of the commodities we've just talked about, an additional payment would be made at that time, but that payment rate, like I said, could change. On to the next slide. The first payment rate that's applicable as of September the 4th, those payment rates are listed here. $1.65 bushel on beans, cent on corn, $8 per head on hogs, and 12 cents per hundredweight on dairy. Again, these rates will not change. So on the first 50% of production on hogs, you will receive an $8 per head payment. Let me back up a second. In this potential second payment, again, potential, those payment rates could change. For example, the payment rate on hogs could drop to $4, it could drop to $0, it could increase to $10. At this time, we don't know, and that will be another analysis will be done, just like was done by the Office of the Chief Economist going into the first payment, what the need is, what the market impacts were. The other thing that could change is some commodities could be bumped off while others stay on, or new commodities could be added. I've already been told that almonds are being added to actually the first payment rate. And so there could be some additional commodity changes of who is in or out on the second payment rate prior or the week of December 3rd, I should say. Again, but that will not affect this first payment rate. The commodities that are listed are guaranteed that payment. Next slide, please. We're going to have we have really two separate payment limitations. So for people who've been involved in our programs before, you will be familiar with our $125,000 limit for ARC and PLC. We will have a crop payment limitation, so a combined payment limitation for soybeans, corn, sorghum, wheat, and cotton of $125,000, and then a separate payment limitation for livestock of $125,000. That'll be combined for any producer that raises dairy and hogs both. The combined limit is $125,000. This does not count against your 2014 Farm Bill payment limitations. So, example, you are participating in ARC PLC, you've already maxed out your payment limitation of $125,000 for that program this year. That is in and of itself its own payment limitation, and you can receive another payment limitation under this program for corn and or soybeans. With that, I'm going to turn it over to Kevin McClure, and he's going to walk you through some of the requirements that are going to be needed to participate.
Good morning, everyone. With regards to the crops that Amanda mentioned for the crop commodities, we do have an acreage report requirement. Most producers are enrolled into our ARC PLC program, and part of that process is to report your crops such as corn and soybeans to us, along with crop insurance if you have crop insurance. So we have the bulk of those already completed, but for this program, if there are situations where you did not get the crops certified on a 578 with the local office, then late file acreage report provisions do apply, and there are fees associated with those. We're not going to be waiving the fees if you did not report timely. Also, if you reported to us a certain intended use, such as grain, and we call it GR in our system, you can't change that to a different type of intended use. We have found out that silage is eligible as long as it was reported as grain on the 578 itself. Most of those cases with crop insurance, they're appraised, and that would be the bushels for which would be eligible for those particular crop acres. Also, we've got determined acres as established. That's usually what we do through a spot check process. Next slide, Jamie.
I just want to jump in here and know that we are having a little bit of audio trouble hearing you guys, and I've been trying to work on the backside here to fix that, but I'm not sure how to do it. So keep forging on, and if we need to repeat something at the end, we'll get to that.
Okay, that sounds perfect. With regards to producer eligibility, this is similar to our other programs that we have, such as ARC PLC. We have under the 2000.
Hang in there, everybody. I think we've lost our connection with Farm Service Agency. We don't have any audio coming from you guys, Amanda and whatnot. We'll give them a second to dial back in. Hang with us, everybody. We're having some technical Monday morning difficulties.
Okay. Good morning again. We love technology problems. So basically, back to producer eligibility. Similar with all of the other programs like the ARC PLC, we have cases where producers we consider ineligible. It happens under the 2014 Farm Bill is where this comes from. Of course, foreign persons, if you've got federal, state, local governments, including public schools, are not eligible. That would include this MFP program as well. Also, persons or legal entities who don't have an ownership share of the 2018 covered commodity. Those situations would be, say, a landowner that's zero share that cash rents the land. They are not eligible for this program. Also for hogs, contract growers, as Amanda had originally mentioned, contract growers are considered ineligible for that program. Next slide, Jamie. To be considered also for payment eligibility, you must be in compliance with HELC-WC provisions. This would be situations where it would be crops where you are actually farming highly erodible land and would need to make sure that you have your conservation plan in place. Also for crops, you must have what we call an actively engaged in farming determination under our payment limitation rules. And that basically is where an entity or an individual provides the capital, land, equipment, and then also provides the active personal labor and active personal management. That is a determination that we make under the ARC PLC program, and that also applies to the crop portion of the MFP program. It does not apply to the hogs or the dairy, the livestock portion of the MFP program. Also, under payment limitation provisions in 2014 was what we call the adjusted gross income provisions, or AGI as we call it, cannot exceed $900,000 for the applicable program year, and for MFP that's 2018. Basically what we do there is it's a 3-year average of your adjusted gross income that's reported to IRS. The years we use are 16, 15, and 14. We skip 17 to make that determination for 2018. What you'll find is if you have not worked with the local FSA office before, you'll be filling out what's called the 941 form for the actual entity that has ownership in, say, the hogs or the dairy, and then each member down to the 4th level, if it's an entity that's making application, would also complete those forms. And then anything with federal debt offset, if there's any federal debt that would be owed back, then that would be taken off of this MFP program as well. Controlled substance, those provisions are normal for us that they would apply, and then any FCIC fraud provisions also apply to the MFP program.
Okay.
Right.
I'm Brad Murray, and we're going to talk about the 910 a little bit. We have a new form. It's a CCC 910 form, and there's a number of options that the producer can submit this 910 form. Obviously, they go to the county office and submit it in person. They can send it by mail, and note the postmark date of January 15th of 2019 that Amanda had talked about earlier. We can also send it, or the producer can send it electronically by fax, scan, or email to the county office. And a future enhancement, the producers, if they have a level 2 EOF, and counties can assist you with that you can actually make application online through farmers.gov. Next slide, Jamie. Okay, we talked about the 910, and the one thing that's good about this is that you can have one application per producer nationwide. So if the producer is multi-county in Iowa or even in Arizona, they could go in and make application for the MFP program on the 910 form. The thing is that the county office, the control county, the headquarter county is the only one that can approve or issue payment. So we'll have situations in Iowa where the producer may be involved in, multiple counties in Iowa. They could go into their headquarter county and make application, or they can go into any of the other counties, or any county for that matter, make application. Part C is completed after harvest. Amanda had talked about, getting this form signed and whatnot, and I'm kind of skipping ahead of myself. But in Part C, the producer can certify their share of the 2018 production for the applicable commodity, or in this case, hogs. So if you have a situation, it's basically one form for producer. So if you are in a joint venture, let's say, or something like that, and it's a 50-50 joint venture, you will only report if you have 200 hogs in a 50-50 joint venture, you will report 100 of those hogs, and your other partner will report the other 100 on a different 910 form. And as Amanda talked about, we have this Part D on this form. It must be signed before January 15th of 19. Basically, and I guess this is the only word I can use, to get into the game, to be eligible for MFP benefits, it's very, very important, as Amanda had said, to complete this part of the form, Part D, by January 15th of 2019. If you complete it on the 16th, then you're not eligible for MFP benefits. So it's very important that you complete Part D at the very minimum and have it on file in the county office, and then you can come back in later and complete Part C with your certified number of hogs. Next slide, Jamie. Okay, so here's an example that DC had given us, and we're going to go on to the next slide to give a more detailed example. So Jamie, go ahead and go to the next slide. Okay, so here's an example, hog example number 1. We have Fred Jones, and he owns 500 live hogs as of August 1st of 18 in Washington and Louisa counties. Fred has not participated in any FSA programs before and lives in Henry County. Fred will need to visit County, which is Henry County, so eligibility documents can be completed for AGI, which is the 941 form that Kevin had mentioned, highly erodible land conservation and wetland conservation on the AD 1026 form, direct attribution if necessary, and this is a change that we had found out recently, but you do have to be on a farm, and we can take care of some situations in here. We're going to be talking to the counties here with a notice or a memo that gives them more details about the on-farm requirement. So at first we didn't think it was required, but now it is. So fluid program, I guess.
Can you explain what that means?
Okay.
Basically, this is Kevin. Basically, what that means is you've got to be associated with an FSA farm number. For all of our crops, those have farm numbers that are associated with them. These would be situations like as we call it, like a building site or a non-cropped area that we maybe don't have identified as a farm number and a tract number. We would need to establish a farm and tract for that particular area, and then that would make you eligible. With regards to the highly erodible wetland determinations, those situations would be okay. You'll certify on a 1026 that you basically have no interest in cropland that would be farmed if you are just a straight hog producer that has hog buildings only.
Next slide, Jamie. So in our calculation or example for Fred Jones, he owns 500 hogs 100%, and the first payment is on half of those hogs, or 50%, which is 250, times the $8 payment rate for payment rate 1 equals $2,000. And again, as Amanda had said, the second payment rate will be determined in early December if there is one. Okay. Next slide, Jamie. Okay, so we have a situation with ABC Sow Cooperative, number sows in Sioux County and 600 piglets. What?
They own 50.
Oh, 500 live. Did I say 500?
Yeah.
Okay. Or I'm sorry, 50.
It's a Monday, right?
It's a Monday. So they own 50 live sows in Sioux County. 600 piglets are born on 7/25 of 18. And Elmer Fudd is a member of the ABC Sow Co-op, is a quarter shareholder of ABC, and in turn has ownership in 150 piglets. Elmer has participated in the FSA programs before and has all eligibility forms completed in Sioux County. Next slide, Gene. So here's the MFP calculation for ABC Sow Co-op and Elmer Fudd. We have first payment rate, the sow, we have 50 that were alive on 8/1 of 18. 50% of that equals 25 times $8 equals $200. And the piglets, which Elmer Fudd gets to claim, is 150 times the quarter share owner of the 600 piglets. And that turns out to 75 times $600. And the second payment rate, again, determined early December. And note, ABC Sow Co-op will have to meet all eligibility requirements, AGI, HELW is issued. Now, one thing about the sow co-ops is that they're out there. And we have talked to the national office on this. are, this is a very easy situation or example, but we have other situations out there that aren't so easy. And DC is talking about those situations. We may have to see the contracts, cooperative, and to determine who has eligibility of these for ownership on 8-1 in the piglets. So this, like I said, is a very simple example, and the other ones will wait for DC to in their future.
Okay, for the next ones, we're going to take a look at crops. And so, and then the hogs, with regards to again, the producers would have reported to us on a 578, and we actually have the acres and a certification on hand. We're just really needing the production to be reported. So in this example, I've got John Farms in Boone County. Boone County is the recording county. And that recording county, again, is where you really do your eligibility paperwork. And in this case, this is the only county John is involved with. So John comes in and reports by the acreage reporting date, which would have been July 15th, that he had 562 acres of soybeans on the 578s with the FSA farm numbers, and he has 100% share. So then John comes in the door and signs a 910 on that same time is over and certifies that he had 28,100 bushels of soybeans that would be his share. So that calculation is pretty simple. The first rate, as Amanda and Brad have stressed, is a guaranteed rate. And we're looking at 28,100 times 50% or 14,050 at the $1.65 that's guaranteed, and that's $23,183 that would be paid out. The second rate, we'll have to wait to see what happens in December, and that would be on the remaining 50% of the production that we would have to see if there's a payment. So the next slide, Jamie, this one here is where we've got multiple counties. And so Jody Farms and is a landowner in Sac, Calhoun, and Livingston County, Missouri. And as Brad has stressed, we fill out one 910 form. And so Jody goes to her recording county, which is Sac in this example. She has reported by the acreage reporting date 1,675 acres of soybeans and also 1,810 acres of corn. Again, that's reported on all farm numbers she's associated with in Sac, Calhoun, and Livingston County, Missouri. So again, one application is going to take care of all of this. So Jody's got a 50% share for which she has certified to the local FSA offices. She comes in the door on December 25th and signs a 910 form. And at that same time, harvest is over. So she certifies to her harvested production, which is 41,875 bushels of soybeans from all counties and 167,425 bushel of corn, which again is from all counties and her share. So with that, then we go to the next slide, Jamie, here's the actual calculation for MFP. So we've got corn and soybeans for Jody's share, 41,875 bushel of beans at 50%. She's going to get paid 20,000 or get paid on 20,937.5 bushel at $1.65. So that guaranteed locked in rate's $34,547. For corn, the 167,000 bushel that's her share at 50%, she's going to get paid on 83,712.25 bushel of corn at a penny, which is $837. Again, we have to wait for December to see what happens with that second rate. There is no additional signatures that would need to be obtained from Jody, because she has done everything she needed to. If there's payment to be determined in December, then those payments would be automatically paid at that time.
We're going to take a question here from the chat box. what are the eligibility requirements for a sow co-op? I think that probably a better way to phrase that question is, what are the eligibility requirements for any kind of entity?
I mean, we'll need the 941, the AGI form. We'll need a 1026 form for HELWC compliance. Kevin, any others?
And then always remember, with the 2014 Farm Bill, we go down into the members. So the entity itself with the EIN would fill out that AGI form, and then each of the members would fill that out as well. So if you have an entity inside that main entity, then that entity would fill out a 941, and then we go to the warm bodies. By the fourth level, we have to be at a warm body to be able to recognize that share. So a quick example, if I had ABC Corp that owned the hogs and Kevin was 50% and Amanda was 50%, then Amanda and Kevin would need to fill out 941s as well, along with ABC Corp.
The question is, are these eligibility requirements on the farmers.gov website?
I don't believe so. No.
But any producer who, when they go in to make application at the county office will either have them on file if they've already been a participant in our program. So if they've already enrolled in our PLC this year, for example. And if they don't, the county office will walk the producer or producers through the paperwork that they need to fill out. So example, for the AGI certification, that's really what it is. It's you sign your name essentially asserting that you do not exceed our adjusted gross income limitations. We then run that through a check with the IRS to verify that. So you don't need to actually bring in IRS records that show what your adjusted gross income has been during 14, 15, and 16. You sign a form that tells us whether you meet the $900,000 limitation or not.
And that brings up a good point, Amanda. That AGI form, we always get, if you haven't dealt with our adjusted gross income forms in the past, people tend to get a little nervous. Does that create audits or anything like that with IRS? And the answer is no. What really happens is it's a consent form to let IRS do what's called an averaging. And so they'll take whatever's been reported for the applicable 3 years and average it. And then they don't send us numbers. They don't send us any of your tax returns. They just send us a report saying compliant or not compliant. And we've got cases where producers are not compliant due to the fact of spousal rules. So you would have filed your taxes jointly with a spouse. And so there are provisions that allow a split of that income, what would have been yours and what would have been your spouse's. And that's through a CPA certified public accountant statement that we take care of for joint filers. So yeah, talk to your local county office, as Amanda mentioned. They will step you through that entire process and answer any questions for you.
Okay, let's move on to the next slide. Jamie, thanks.
Okay. The producer can certify their share of actual production in the commodity in Part C. Again, that can be completed later. Again, that Part B, the signature is very important by January 15th. However, the records must be provided upon request if pulled for spot check, verifiable and reliable. And the thing about this program is that it's being rolled out fast, and it's a new program. And basically, the spot check percentage will be very high, we're expecting. So even if you don't provide your documents up front with the county office for your sales records, things like that, make sure that you have them on hand, because this program is expected to be perused very closely. Next slide, Jamie. So some examples of verifiable and reliable production evidence are receipts of sale. We can do measurement service for crops, and we have RMA production records, insurance, and the good thing is I was 90% insured. Here's a first that we'll accept a combine yield monitor. We've never had that acceptable in the past. And for hog size things, we can look at vet records, breeding records, inventory records, sales receipts, feeding records, etc. And the production evidence must show the number of live hogs claimed and owned and in inventory as of August 1st of 18. I know that that your association is checking on the use of pig champ records and things of that nature with the national office, so hopefully that's something that will be accepted. So again, that's something that we're looking at. And with MPP, we're just going to look at the production used for dairy. So any record that you have, basically, please keep them on hand or present them to the county office upon application.
The application, if you want to take a look at it in advance of going into the county office, it's a very basic front and back page form. All commodities are reported on the same form. So if you grow corn, soybeans, and hogs, all three commodities will be reported on that single piece of paper where you also put your John Hancock. That form, that 910 form, is available at farmers.gov/MFP. You can go print it. You can actually print it out at home if you like and fill it out, fax it in, email it in, or take it into the county office. You can also just stop in the county office and fill it out there. They'll have copies. For any people who farm as individuals, so if you're an entity, this would not apply, but if you farm as an individual, you can also request a login access. We call it our level 2 EOS, but you can essentially get a login to be able to utilize essentially our farmers.gov website more fully. By doing so, you can really get all of your information. You can see your farm records. You can print and access those. You can really probably eliminate some trips to the county office. You can also check on the status of your application, of this 910 application. We are going to be moving in the future, if you are a participant in other programs, all of our programs to this farmers.gov portal. And so if you are, as I said, an individual and want to get signed up for that now, you can. It will certainly give you more access to your records than you might have at your fingertips at home. Again, you're still able to get any of those records just by going into the county office. You can jump 2 slides ahead, Jamie. Again, just a little bit of a summary. The application for this is by producer or by entity, where only one 910 is submitted for all counties and all states that producer has an interest in. And we didn't mention this earlier when we were talking about the entities, but the entity is the applying person, the applying participant. So in the case where you've got an LLC with maybe 5 members, everyone owning a 20% share, it is the entity that is applying. Now, we will do direct attribution. We will look down. We will want to know sort of the steps down to the warm bodies. We are going to identify who all the warm bodies are, but the entity is the producer making the applicant. That is the case with our PLC program now, and the rules are exactly the same. The other thing I'll mention, we talked about the recording county for the producer is where they'll want to go in. That can be their home county. That can also be, you know, we used, I think, the Fred Jones example where Fred farmed in Washington, or he had hogs in Washington and Louisa and lived in Henry. If he wants to make Washington the recording county, he can do that and do everything for his Washington and Louisa County hogs in Washington, or he can do it more likely in his home county of Henry. Like we said earlier, the first payment rate, that will not change or be revised. That payment's guaranteed. The second payment rate, only if applicable, will be determined the first week of December. We've got 2 separate payment limitations. So if you are raising crops and you are raising hogs, you could be eligible for a combined 250,000, 125 on crops, 125 on hogs. The other thing I'll mention here is if you hit the payment limitation in the first payment rate. So you go in and you sign up for your hogs, you are eligible, or the payment rate, I should say, calculates out to $140,000 on this first payment, the first 50%. You will be hitting the payment limitation at that point. The check will be issued for $125,000, and you will not be eligible for the second payment rate if there is one. Conversely, if you come in and you're eligible, let's say in this first payment for a $40,000 payment, you'll be able to come back in. Actually, I shouldn't say it that way. You don't have to come back in. We already have your production history. We already know it. We'll automatically cut a check the second go round in December if one is issued. But let's say you hit the $40,000 was your payment on hogs in payment rate 1, you'd be eligible for up to $85,000 in the second payment rate. The actively engaged in farming rules that apply for crop production do not apply for livestock production. If you are already participating in our PLC, you'll be familiar with actively engaged rules. Those rules do not apply for the livestock payment. Direct attribution rules apply. We've talked about that. That's direct to the producer finding the warm body. You must have a share of the crop or livestock for 18 to be eligible for MFP. We've already gotten questions about hogs. Let's say hogs were owned by one individual on August 1st. The same pigs were then sold that same day and someone else owned them on August 1st. The payment is to the hog. So no hog will be eligible for more than $8 in payment, and it's going to be up to probably between the two individuals to figure out either whose share or how who's going to be claiming that one individual hog, but no hog can be counted twice, even if it was owned by two people on the same day. If you are a crop producer, you will have to have done your acreage certification via our 578. If you didn't, you will still be able to get it done, but you are going to have to pay the late file fee on that, and sequestration cuts do not apply to this. So the full payment rate will be made here in the first round of payments on September 4th. Okay, sorry, as we've been talking, we had a couple of questions come in. I have heard that the MFP program might be going away from the August 1 inventory date for livestock, possibly to a 30-day window. Any word on this, or is it just a rumor? I will answer that question. It was actually a question that Pat McGonigal, your CEO, asked of us. And that is something that I believe Pat has taken to the national office for their consideration. We have not heard anything that they are looking to extend that. At this time, we've been told that the date is August 1st. So that might be a better question to ask Pat or someone within the association if that negotiation or if that is still going on, that conversation. Another question, so the cap would apply to the entity, not the individuals that make up that entity.
That's where direct attribution comes into play. Basically, we look at the payment level entity first, and it has the $125,000 limits that Amanda has talked about. Then it goes down to each of the warm body members. So if you are a member of multiple entities that are requesting benefits, you as an individual cannot exceed that $125,000 applicable limit for crops and or livestock. So that's where direct attribution comes into play. If you're only involved in one entity, then it's not an issue. If you're involved in multiple entities, then direct attribution may kick in where other entities may be limited from your share, depending on if you individually hit the $125,000. So that's how direct attribution works.
Some of these, obviously, the more entities, the more people involved, the more complex it gets. And so every situation tends to be a little bit different. And so what we encourage people to do is go into the county office and talk to the county offices. They are very familiar with tracing the payment, so to speak, tracing the lines to the people, because we do it all the time on the crop side in entity structure. It's going to work exactly the same. Now we know the entities might be structured a little bit differently. There's a question here. If the owners of the sow co-op are also the individuals that receive the pigs, do you apply at the sow co-op itself or as the individual shareholders? Again, depends on what how the sow co-op is structured. If you're a partnership, the individuals will apply. If you have an EIN, the entity applies. I hope that answers that question. But again, the county offices will really be able to help you in almost all cases. In the probably 2 to 3% of cases that really are so unique and so something we just have never seen before, the county office oftentimes at that point will involve us at the state office, and then even sometimes we've got to get the national office involved. We do know we have some large entities with some complex structures that cross multiple states. We are already having some conversations about with some of the senior folks within those organizations and our national office about how those records are going to get reported. So depending on the nature of your business is really going to be, we're going to have to take those on a case-by-case basis and work that through with you for the most part. I want to make sure I got all the questions here. Are there other questions? One question that we got on the call last week that I'll bring up here, and that was about the cap, or really about the entity. So we're going to look back to what the entity was, who the entity was on August the 1st, the date that is applicable for the program. So if you want to try to change the entity structure now, or you're in the process of changing your entity structure now for whatever reason, we're not going to be looking at today's structure. We're going to look back to who owned the pigs, who was the owner on 8/1. That's where the payment's going to go. Other questions, either by phone or the chat box?
So I do have everybody muted on the line.
Okay.
We're coming up on our time here pretty quickly, but if you have questions, go ahead and enter them into the chat box. If we don't get anything here in the chat box in the next several minutes, I will risk unmuting everybody and you can answer your question over the phone. But while I'm giving some time to people to enter that into the chat box, if they still have a question, I have shared on the screen Drew Mogler's contact information as well as my contact information at Iowa Pork Producers. Drew and I can help producers as they need, but primarily our answer is going to be referring them to their county office. So if you do have questions, we can, reach, if the quickest thing is for you to reach out to us at the Iowa Pork Producers Association, we can help connect you to your county office and help get those questions answered for you. Okay, I'm not seeing anything else come in here. I will go ahead and unmute everybody.
Blake, are you in the office?
Yeah, I'm listening to the tail end of this webinar, but I can pop out now. It's done.
Well, I'm on my way to Mitchell's. I think Andy's load will finish down here, so.
Can you guys mute your lines if you don't have a question? Okay, it doesn't sound like there's anything coming in. Again, please don't hesitate to reach out to Iowa Pork Producers Association if you have questions. As Amanda mentioned and her team, your best bet is going to be your local county office, your Farm Service Agency county office. And with that, we thank you guys for your time today, and we appreciate everybody's participation, and especially a huge thanks to Amanda and her team at the Farm Service Agency.